I have been getting these questions from a lot of my followers from TikTok and Twitter. These questions get repeated all the time. They keep asking me, how do you mark your valid key levels? Some also ask, how do you manage to get the right point of interest with all these key levels available? Multiple OCL, multiple V-shaped key level, multiple QM. How do you manage to get a precise key level that works most of the time? So in this video, I'm going to solve this problem, show you how I mark out valid key levels, how I get precise key levels. Not every key levels are valid to trade. So I am going to show you a step-by-step guide on how to mark out these valid key levels. And without wasting much time, let's dive into this. Okay, so we are going to start with this current price action of today, which is Monday. We are going to check the price action of today to see how you can mark out valid key levels, because a lot of people find it very difficult to mark out the valid key level because seeing all these multiple key levels, they find it difficult, like which key level is valid, which key level should I go for, and we maybe pick a key level right here and my price might come to the one down here, and maybe when you pick the one at the top, price might not come to that extreme and use maybe the points of interest below. And this is what I do to make life easy for me. What I do is I have some set of rules that I follow to mark out a valid point of interest. This makes it easy for me to avoid unnecessary points of interest. How do I do this? Now, let's say, for example, this is a point of interest on the daily time frame, which is your bias time frame. Now, when you get a bias, what comes next is your point of interest based on MSNR. Whenever you get your bias, right, the next thing that you need to look for is your point of interest. Once you get a point of interest, that is when your entry comes in. What I do is, let's say this is a daily key level, and after we have a rejection on that point of interest on the daily time frame, because we need to get a bias, right? Now let's say this is a rejection, right? This is a rejection on the daily time frame. After price reject on a daily time frame, the next thing we need to see is a break of structure on the 4 hours or on the 1 hours time frame. And the most high probability key levels comes from the daily time frame or the 4 hours time frame, after you must have confirmed your bias to be bearish or bullish. Whenever price reject, I need to see something like this. If I can get a break of structure to the downside, this is when I am going to be interested to sell if my bias is for sales. If you have a break of structure, you will have just 4 points of interest to look for, but the most important key levels and the high probability key level is this apex. What we have is the apex. The most high probability key level is the apex, the QM. These are the most high probability key levels you need to look for. These two are high probability key levels. Now, follow these rules. Whenever you have a daily reject daily, a 4H break of structure, the next thing you need to look for is either a QM or the apex. What comes next is an OCL. And the last one is this. This is the last one. This is the breaker block, which you must follow the rules for this breaker block. It must have a fair value gap. Price must violate that key level with a fair value gap before you can consider that point of interest valid. Some people will say, okay, how, if I have all of them available, which one should I go for? You know already, this QM and the apex is the most high probability point of interest you can use. And also, going into the lower time frame to refine into a structure is going to help you avoid points of interest that are not valid, because structure will help you filter the right points of interest. Just mark your points of interest, but when you are refining these points of interest on the lower time frame, it's going to filter on it's going to filter key levels that are invalid, and you will choose the right points of interest when you refine on the lower time frame. Now pay attention to this. If you don't have a QM and you don't have an apex point of interest, let's say all of this apex and QM is mitigated, what you need to do is to pay attention to the OCL. That's when you are going to pay attention to OCL. But if you have all these four, I will advise you to use the breaker block with entry confirmation and allow the OCL and go only for the apex and the QM. If you have all these available, avoid these ones down, or you wait for the breaker block and use confirmation entry to sell to the downside. Then go for the QM or the apex. These are so powerful. This QM and the apex is very, very powerful. I have one of my friends, he trades only the apex and the QM, and he is profitable. And you can do same. If there is no QM or the apex, that is when you are going to focus on the OCL. After you have confirmed your break of structure, your key level or your point of interest must come from the 4 hours time frame or the daily time frame, after you must have confirmed your break of structure to the downside. And if there is no QM and there is no apex, that is when you can go for the OCL and this breaker block, because these 2 points of interest have been mitigated. Then these two can be used. But if the 4 points of interest is available at the same time, you can either go to the daily time frame. If you are still doubting, you can go to the daily time frame. You have just a single point of interest, just one single point of interest. This will save you from this confusion. But if you want to focus on the 4 hours, go for the apex and leave these two if these 4 are available. Now let's see if we can do some chart example. Let's do this example with GBPUSD. Right now, let's say we want to get our bias. After you must have gotten your bias, let's say a rejection on the daily time frame, and also we had this rejection and we had this CRT. Right, we have 2 bias method at the same time. Now let's go to the 4 hours time frame. If we are going to have a break of structure on the 4 hours time frame, and moving to the 4 hours time frame, you can see we have 2 break of structure. We have a break of structure 1 and we have a break of structure 2, right, which is a strong sign for a reversal. Now you would ask yourself, how do I get a point of interest? Now, looking at this QM, like I said, it's either you are going for this breaker block. Now, this breaker block is automatically invalid because we have no fair value gap. So this one is deleted. And the next one is this QM. But this QM, looking at this QM have been mitigated already. Right, you can see this QM have been mitigated already, and the apex, which is the extreme, have been mitigated. So I am going to pay attention to this key level only and these two OCL, right? And these two OCL. So I would mark this OCL and I will look for a structure on the lower time frame. Looking for a structure is going to help you avoid choosing the wrong key level. This is going to help you choose the right key level if you understand structure. Now let's go to the lower time frame to refine this into a structure. I have just this key level and this key level up here. Now this will filter everything and choose the right points of interest. Let's go to the 2 hours time frame. On the 2 hours time frame, I already have something, right? Now this is the point of interest right here for me already that I need to refine to. Why? Because here is going to act as liquidity and we have a fair value gap, which means price is coming to fill in that fair value gap. Whenever price takes out a liquidity, breaks structure to the downside. This is to tell you this high is protected. We broke two structure to the downside. This is a strong sign that price is reversing, that price is selling to the downside. And this key level I did mark is mitigated already, which is automatically deleted. Or you can refine into this point of interest right here. But so far, I already have a structure right here. I have nothing doing with the point of interest above. Even if I can go to the 1 hour time frame, we are going to see something. You see, we have a sweep of liquidity here. We have a break of structure here. And this guy is going to act as a liquidity with a fair value gap. You see, any point of interest closest to liquidity is a valid point of interest to use. It's a valid point of interest to use. And some people would say, okay, what if we have multiple points of interest here? How can I choose the right point of interest? Higher time frame, move to the higher time frame, you are going to see a point of interest. Now let's say we have this point of interest. Let's say I want to this, let's consider this as 4 hours point of interest. Let's consider this 1 hour as a 4 hours point of interest. We have this point of interest, we have this point of interest, we have this point of interest, you have this point of interest. You are going to be confused. You don't know which one to choose. The best thing to do is move to the higher time frame. It's going to reduce. Now you have just few points of interest available. If you are still doubting, you can go to the daily time frame. You see, you have just a single point of interest which price did use to sell to the downside. You see, just this point of interest which price did use to sell to the downside. Now let's move to the lower time frame. This is a point of interest on the daily time frame. It's a single point of interest. But if you go to the 4 hours, you see, you are going to filter everything is inside a breaker block. Can you see? This point of interest is inside a breaker block. Let's go to the 2 hours time frame. Now it's valid. This breaker block has a fair value gap, which is a continuation setup, structure type 3, which I did taught. If you haven't watched the video, you can go watch this video on entry. This is one of my structures I trade. Breaker block with a fair value gap. I need to see just 3 structures, structure type 1, type 2, and type 3 only. This is what I need to see. This makes your point of interest valid. Did you see? I moved to the daily time frame to pick just a single point of interest. Let's say you did not want to use this 4 hours point of interest and you're doubting, okay, what if price comes to the extreme? What if price comes to this one? What if price comes to this one? If you don't want to focus on the rules I gave by choosing either the apex or the QM, just go to the daily time frame. You are going to pick a single point of interest. You are going to see just a single point of interest. And on the daily time frame, you can see we had just a single point of interest right here. Can you see? We had just a single point of interest. And if we can go to the 4 hours, it's going to be a breaker block on the 4 hours time frame. Refining on the 2 hours time frame is going to be a clean breaker block, valid breaker block, because we had a fair value gap right here. You can see here, we had the fair value gap right here, had a fair value gap right here, and price tap into that point of interest and then drop to the downside. You can put your stop loss above here for a breathing space, and you see price drop to the downside. Let's see if we can get another example. Let's check yeah, so now let's check another example on XUSD. This is the daily time frame. Let's say this is CRT. Now I'm paying attention on how to mark out a valid key level after you get your bias, right? So we are not going to go deep into entry. If you want to watch videos on entry, you go to my past videos and the recent videos I just uploaded. Let's say this is a CRT and we have a break of structure on the 4 hours time frame, which is here. After you have a break of structure, whenever you have a break of structure, it's going to appear something like this, right? It's going to appear something like this. Something like this. Let's say this. We're going to have something like this. We are going to go for the QM, the apex. This is the most high probability. I repeat, please, I am insisting on this. If you are doing it wrongly, you are going to experience losses. So that is why I'm taking my time to explain this deeply. You trade this only high probability. This is the most high probability point of interest. You go for this. If you have all the 4 points of interest, avoid the rest. Avoid all of this and go for this if you have 4 at once. But if you have something like this, like let's say the QM is mitigated, right? Let's consider this QM. Let's consider this QM mitigated. I have only the OCL around here, right? You're going to choose the OCL or this breaker block if only it has
If
a
you can't find a
fair value gap
in
inside.
a lower time frame, then this is invalid. And if you can't find a structure, then it's invalid.
First thing, mark out your points of interest. Second thing, look for structure. These two things go in line. You need these two because you can get a nice point of interest on the higher time frame, but no clean structure on the lower time frame. And if you just execute based on points of interest only, then you are going to get stopped out before moving into your direction. So you need to always consider structure. You need to always consider structure. Okay, let's continue. Let's get out of this. Okay, now let's continue. So this is the 4 hours time frame after we have confirmed our break of structure. Can you see where we have our break of structure? This is a QM. This QM will come in many form. This QM would come in many form, and this is the apex that I can see. Now, if you go to the line chart, this is going to be a QM. A QM will look something like this. For those who do not know what is a QM, this is a QM. Like a head, a shoulder, and a head, a shoulder, and price would come here, create another shoulder before dropping to the downside. Something like this. This is what we call a QM. For those who do not know what is a QM, this is a QM, and this is the apex, right? This is a QM and this is the apex. Now looking at this QM was mitigated already by this candle, which is invalid to use, right? So you're going to delete the QM. And the only point of interest you do have is this extreme and this breaker block that we have right here that has a fair value gap. See, this breaker block. Why? Because it has a fair value gap. And if it has a structure on the lower time frame, this is going to be valid. And lastly, we have an OCL right here. Since there is no breaker block, this is the extreme, right? This is the extreme, and the extreme is very, very fast. So you need to use your brain sometimes. Whenever you have price disrespect a point of interest with volume like this, price is not going to come to the extreme. Note that. Price is not going to come to the extreme. Price is going to use the most closest point of interest to sell to the downside. Whenever price disrespect a point of interest with volume, can you see here? Price disrespected with volume. Price just used something around here to push to the upside. Price disrespected this point of interest with volume. What did price do? Price just used a point of interest right down here to drop to the downside. It happens over and over. So that is when you want to pay attention to the extreme and the rest. If you have a clean structure with this breaker block and this OCL, if you can have a clean structure, go for it, execute. Or if you are not confident enough, use confirmation entry to execute. Now let's go to the lower time frame to refine into a structure. Now this point of interest is mitigated, which I'm not going to use. And this one is still fresh because this is a breaker block, right? You can see it still have a fair value gap and it's already creating something like a structure, right? Now this one is not, it's already mitigated, which you can refine into this QM here. You see, which you can refine into this QM here. You can see it's fresh. You can refine into this QM. It's valid and refine into this QM, but it will be valid if only we can find a structure around it. Now let's go to the 1 hour time frame. On the 1 hour time frame, this is mitigated and this one is very, very fresh. On the 30 minutes time frame, you see we have something like a structure, but for me, right, to be honest, I would go for this extreme, this this breaker block right here. Why? Because it has a liquidity after taking out this high. This is a sweep of liquidity and we have a break of structure right here, and this was the first pullback. And also we have Asian liquidity, which was a higher probability setup for price to come here and sell. But just for the fact that if you understand, when price disrespect a key leveled volume, price would 70% of the time not come to the extreme or your point of interest above. Price would just use something closest to price and drop to the downside. So this was a nice entry. If you go to a 15 minute, you're going to see better. You see, we had a break of structure and we had liquidity and the rest. So you could execute from here because this liquidity is closest to this point of interest. But for me, it would not be high probability setup because of this Asian liquidity only and this fair value gap here, which I could have been expecting price to come and fill. So I'm just giving you guys examples. See, I'm just giving you guys examples. Let's see if we can get another example. Let's go to UK 100 and see. Okay, yeah, we have something here. I did analyze this trade. You see, this is a rejection in the daily time frame. Let's go to the 4 hours. On the 4 hours time frame, there was a QM right here. There was a QM right here. This is a QM. Right, this is a QM and the apex. So we have the two. So we are going to pay attention to only this one and this one because we have the QM and we have the apex, right? Now let's refine into a structure and see which one we are going to go for. Now on the 2 hours time frame, you see this QM is already mitigated, right? So we are just going to delete this because it's already mitigated. Let's delete it, but the extreme is very, very fresh. Let's go to the 1 hours time frame. On the 1 hours time frame, we have everything. We have the structure. Let me go to the 30 minutes to see a clean structure better. You see, all these points of interest is clean. We had a break of structure, a minor market took out this high. After price took out this high, we broke board, we broke two structure. And if you haven't watched my video on entry, please make sure you watch. Whenever price disrespect a point of interest, breaks two structure, it is strong sign that price is going to reverse, because if price can break two swing lows, first structure and second structure, then this is a powerful sign for us to sell. Also, by leaving a fair value gap. So we have a sweep and a break, and we have price engineered liquidity, and we have a point of interest closest to liquidity. So your entry could have come from here, following the plan. If you can follow the rules, this is how you are going to be trading. Very, very simple. All you need to do is, if you have all four key levels, pay attention to the apex, QM. Only if you have the four, go for that. But when price disrespect your key level with volume, or break structure to the downside with volume, that is when you can use the breaker block, the OCL, because price is not going to come to your extreme or the apex when you see price disrespect with volume to the downside. But if your QM is also mitigated and the apex is also mitigated, then your breaker block and your OCL are going to hold. Let me see if we can get an example on that. Let me show you an example on breaker block and OCL. Okay. Yeah, this is a trade. Yeah, this is what I did. Now, see what I did here. We had a rejection. As always, you need to confirm your bias. Price took out this high, filled in this fair value gap, and rejected from this key level right here. After price rejected from this key level right here, we broke structure on the 4 hours time frame. See, there was a break of structure on the 4 hours time frame. So now, what are you going to do? You are going to mark out the QM. You see, the QM and the apex. So, like I said about the rules, whenever price disrespect or break structure with volume with a massive single candle like this, don't wait for price to come to your QM. Use the breaker block or the OCL to sell if your OCL is valid and if your QM is valid and they are having a clean structure on the lower time frame. But if there is no structure, do not execute. And if the rules are not intact, do not. For a breaker block, you must have a fair value gap. Now let's do this. This is a breaker block. Now let's refine this into a structure. Now can you see this is mitigated? So I'm going to refine into this breaker block that has a fair value gap, right? Now let's go to the 1 hour time frame. On the 1 hour time frame, we still have a clean breaker block and a fair value gap inside. If I can zoom, you're going to see we have a fair value gap inside, which this guy is going to act as a liquidity. Then we have our key level closest to liquidity. Now let's go to the 30 minutes time frame. On the 30 minutes time frame, you see it's still valid. Point of interest still valid. Now, if you are not confident enough to execute with a limit, because everything is already available, we have a break of structure, we have liquidity, and we have a nice point of interest. But if you doubt this setup, right, because this setup is a clean setup, right, if you doubt this setup, you can wait for confirmation. If you doubt this setup, or if you have another point of interest here, which is that OCL, right, this is the OCL. You can that OCL can be refined here. If you go to the higher time frame, this point of interest is going to be that OCL. But just because price broke to the downside with volume, these key levels above, I won't expect price to come right to this point of interest above unless there is fundamentals. So I am going to wait for a CRT around here. If you haven't watched my video on entry, I'm going to look for a CRT around here. You see, we had a CRT on the 1 hour time frame, and if you go to the 15 minutes time frame, you have a break of structure, which I did explain. Whenever you have price breaking two structures like this is a high momentum for price to push to the downside. taking two structures and also leaving a fair value gap is a good sign for you to execute, you see, and boom, to the downside, price sold to the downside. It's sold to the downside. Simple as this. This is what you can do, trading and choosing the right points of interest. Either go to the higher time frame and you're going to reduce the point of interest. If you have multiple points of interest, just move to the higher time frame. You are going to have either 2 or 1 point of interest to execute from. Let me see if I can just look for a random example and show you guys. Let me see. Okay, let's say maybe you have multiple points of interest. You have this, you have this, you are confused which one to choose. You can just go to the daily time frame, and on the daily time frame, you are going to have something. You see here, you see, this is going to be a single point of interest. You see, this will help you choose the right point of interest. You see, now let's go to the 4 hours. You're going to see the right point of interest to use. It's inside here, which means you can refine now this point of interest to this QM. This makes sense now for you to use this point of interest above here. This will help you filter all these points of interest that was confusing on the lower time frame. Just move to the higher time frame, one time frame above. If maybe you are choosing your points of interest from the 4 hours and you have multiple points of interest, just go to the 4 hour to the daily time frame. You're going to see good points of interest to use. So if you love this video, like, share, comment, and if you want me to do a video on this and show more examples, just comment and I'll do something on that. And also, if you have any question, ask and I'm going to answer.